Welcome to the Private Lenders Podcast with your hosts from Hard Money Bankers, Jason Balin and Chris Haddon. This podcast is sponsored by hardmoneymastermind.com.
Hey everyone, Chris here. Thank you for checking out the show. We have a special guest in the building today. Well, not in the same building. We're in different buildings. We have Daniel Paloscio from SEP Capital in Tampa, Florida. Danny, thanks for being with us.
Yeah, I appreciate you having me on.
No, I appreciate you taking the time, especially during holidays and everything else going on. So yeah, we're going to dive into some fun stuff today. So yeah, we've been hanging out a few years in the mastermind and everything else and got to really learn a good amount about each other's business. Same with everyone else in the group. And we're going to talk about a number of things related to the whole world of private lending. Getting started, would you mind giving the audience a little background on you and your history in business?
Yeah. So like a lot of the guys in the group, I started in real estate back in 2013. I was doing some fix and flips, some buy and holds, did some wholesaling, and then over the years just kind of saved up my money and did a few loans on my own. Didn't really take it seriously. It was just kind of a side hustle. And I actually ran into your group a few years ago. And when I realized that, you could make a whole business out of this, I decided to kind of jump in.
Okay. So you did a few different kinds of real estate investment deals when you were starting out. Did you have a focus, or what were you best at in that niche?
Probably in the beginning was marketing direct to seller. I did a lot of PPC, a lot of direct mail. And I think that, negotiating with sellers and just getting in front of people, I think I was probably excelled at that.
So when you would get good leads and deals, you would either flip them yourself or wholesale them? Were you looking at both possibilities going in?
Initially, it was all to flip them. But as we grew, I realized how hard it was to flip houses. There's a lot of moving pieces. There's a lot of different people involved with, their own ideas. And so it's sort of sometimes like wrangling cats, herding cats. But, I say all the time, the guys that are successful in that business are just really great managers. They're really great, motivators of people. And, my personality trait, I think, likes to be more, in the back of the office versus in front of, talking to a lot of people. So, like I said, so started with that. And actually, I forgot the question.
Yeah, no, we were just talking about some of the initial deals and background. Out of curiosity, how'd you finance your flips at the beginning?
In the beginning was all hard money. I had a private lender who's my old neighbor, actually. My mom ran into him. Yeah, she ran into him out. And he asked how I was doing. She told him I was, getting into real estate. And I think I borrowed initially from, actually on my first deal, a friend of mine put up 100%. And I put in all the sweat equity. We split 50-50. And then after that first deal, my mom, ran into my old neighbor, and then he funded my deals pretty much from then on, him and a group of guys with him.
And then at some point, once you built up some cash, did you start buying cash and just not having financing costs? You get into that too?
No, I never really paid cash ever. I always financed.
Okay. And then the assets that you had built up, you started putting those into loans and kind of doing the same thing. You were lending and still flipping at the same time?
Right. Yeah. Well, yeah, lending and flipping. And then when I would run out of my own money, so that's how I sort of got started in wanting to grow this, is I would run out of my own money and went back to some of the hard money lenders that I borrowed money from and just presented the opportunity. In the beginning, I gave them all of the interest and I just kept the points.
Early on, we did something similar. Our first full year was 2008. And we went around and met and did a lot of lunches with the private lenders, the hard money lenders who had been around forever. They're all, our parents' age, basically. And we met the ones in Baltimore Metro, met the ones in DC Metro, became friends with some people, and also picked up some capital by possibly they're transitioning out of the business at that point, or they are going too soon because they're getting near retirement age, or maybe they just don't have deals, right? Maybe they didn't have deals, and then, hey, maybe they could deploy at 10% instead of making their 12 or whatever with points, but they don't have to do anything. And so a few people are like, yeah, life's just going to be easier if we give our money to you.
Yeah.
That's not a bad hack, I mean, the whole landscape has shifted since back then, and it was just, very mom and pop. And like just our timing, like we changed that a little bit by being the next generation and by creating a real brand and by having marketing behind it. But now everybody does that, right? Now everybody's like, branded and very visible on social and everything else. So it's been an interesting transition, in the past 15 or so years. At what point did you think that you wanted to do lending full time? Like, is there something that happened or clicked?
There's really not. It was sort of a slow progression for me, but I just sort of realized that there's a lot of leverage on time, and I felt like I could accomplish more and do more with much less. My office is small. We've got now an originator and one portfolio manager and myself, and I frankly can make a lot more money with a lot less people. And so when I sort of realized that and the leverage on time I got, that's when I decided to just sort of focus more on it.
No, I totally agree. I mean, this business model, and hopefully everyone, in the audience watching or listening, like knows the power of it. But like for the amount of hours that go in, there's a lot of dollars that come out, which is a good way to approach any kind of business, right? And so, yeah, real estate investing for us too was part that, in part, like I'm not the best property guy. Construction, design, knowing what's wrong with something. Jason's better than me, but still didn't want to focus on that. And I think that, there are people who become lenders who are excellent flippers and real estate investors in general, and they might, just kind of run out of gas after a certain amount of years and deals and everything else. Or maybe they just realized, like us, that's not what they're best at. They might be better at running a lending company, and the organization that goes into this is something that just really clicks for us. Like, how's the marketing going to work? Back office, finance stuff. Like, it all just kind of clicks for what we're good at.
Yeah. Well, and we're doing a lot of the same stuff that guys that are, flipping houses are doing. It's just with many less people involved, there's,
right.
Yeah.
How do you generate most of your deals? Where do your leads come from?
Majority is email. I've got a large email list. We send out an email blast every week, kind of mimic yours, actually.
Sure.
And we do some PPC, but that's not really done great for us at all. We're spending a lot of money on that, and we'll probably stop that. We'll continue to do retargeting. So we do a lot of like Meta and Google retargeting. So just when people visit the website, we follow them around the internet, which helps with having the email list because you're bringing people to the site. And we do probably the majority of what we do in our business is referrals. We just a lot of people that we've done loans with over the years, or that people that I've known locally, have referred friends or other investors that they know, and we've grown that way. And we also buy connected investor leads, which have been pretty good lately too.
Oh, have they? Good. I know those kind of go back and forth in terms of quality. So for the referrals, I mean, referrals are fantastic in any business, and definitely in this one. Have you ever looked into giving people some kind of incentive for it, giving out gifts or gift cards or something like that?
Yeah, I mean, for our referral partners, we pay out generally 15% of the origination fee. So the math,
so they know they're going to get compensated.
They don't always know, but we always send it.
Oh, that's huge. That's a great idea.
Yeah, a lot of them, it's not the intention, but
right.
But they're pretty excited when they get the check.
That's a good point. We could get better at that too, because ours has kind of been, if somebody has the conversation about being compensated for this referral, then obviously we're gonna pay them. But we have never had the idea to just pay them anyway, which is a pretty damn good idea.
Yeah, I mean, it makes a huge impression on them, and they're excited about it. They tell people about it, and and it doesn't even have to be like, we don't want them to originate or broker the deal at all. Really, all we're looking for is, a connection to somebody who might be in need of a hard money loan, and that's it. They set up a phone call, maybe they make an introduction, and then from there we take it.
Yeah, I like that. I think we could step up our game in that aspect too. You started to mention your team a little bit. At this size, like in terms of portfolio and everything else, what does your team look like, and who's doing what?
So Kelsey, who is our portfolio manager, who is a rock star, she pretty much handles everything in the file once it's, I don't know what the term is, originated. Once they decide that they're going to pay for due diligence, really, she takes it from there. So she's talking to title companies. She's making sure that we have the appropriate insurance, putting the file together for me to review. Right now, she's also acting as sort of a servicer, where I'm servicer right now, but all of the follow through is essentially she takes care of. So, when insurance policies are coming due or expiring, she reaches out to borrowers, she reaches out to brokers to get that stuff figured out. She's working with she's working with title companies on the acquisition and the disposition. So she pretty much does everything that really hands-on stuff in the office. Then we recently hired our first originator, Lisa, who did this, who was an originator. She was an account manager for a hard money lender in California years back. And she's been exceptional as well. I think she's been with us for a little over 60 days, maybe close to 90 days now. But I think she's already closed maybe 3 or 4 loans. She's got a large condo loan that she got maybe off of a connected investor for $1.5 million. So she's pending, and she just turned in another term sheet for a $500,000 loan in Miami. So she's exceeded my expectations of her for sure.
No, that's a great start. Very strong start. Are you passing her all inbound leads, or are you keeping some repeat clients or something?
I'm starting to pass her leads now. It was sort of like a crawl, walk, run scenario. So I didn't want to let go because I'm pretty dependent on the income of this business. And so I didn't want to let go of originations totally until, I could trust that she was able to produce. But so now I do give her some leads, and my email blasts. So with our email blast, I branded an email blast for her. So I send out to my list, and then she has her list. The goal for me, though, is to have maybe 2 or 3 originators that I can send the blast out combined, work out some sort of a territory, and then do like a round robin on the calls, because our email list is large. So when the emails go out, we're inundated with phone calls. It was to the point that I couldn't, I had to like block off an entire day, twice a week, when our emails went out, because the phone would just not stop ringing. And so it was difficult to get anything done. So I've given her some of those blasts now, and she's converted them. And I think, she's really out originated. She's on her way to be out originating me, without a doubt.
Yeah. No, we've seen something similar, especially with Dave coming onto the origination side too, is that I know a lot of people worry about if they're a kind of smaller lending operation, if they bring on an originator, that they have to pay X% of what's made in the deal, origination fee, or however it's set up, that's going to take out of their pocket. That, the take home is going to be less because you're paying this person too for doing the same deals. And we've found that if you have the right person in that position, it's not going to make you do the same. You're going to do more. Yeah. They're going to do a better job of working these leads than you might if you're inundated. Or same with Jason, right? Like he might work his past clients and like real strong applications, and then kind of brush off some of the other leads that you aren't so sure about. And there's a ton of those in this business, right? There's a lot of leads. Like it's real easy to judge a book by its cover, right? Like you take a look at a loan application or something like that, and you're like, I don't know about that. But if you actually have the conversation with the potential borrower that you need to have, it might all of a sudden be a total deal, right? And if you have some more bandwidth in terms of having originator salespeople, you're going to do a better job per lead,
right?
And it turns into more deals. And frankly, we've been trying to do the same thing, especially with our business partner Ian in the Philadelphia market, because he gets a ton of leads, an absolute ton. He's got a big database, and in all likelihood, they could be worked more and better, which could happen if he had a little help. So it's something we're looking into in that market. And I'm glad to hear you had the same experience. That's how it should be.
Yeah. Yeah. And like you mentioned, there were like the connected investor leads, for example. I called those in the beginning, and like you said, they were tough. And so what I did is I just sort of set up an automation in HubSpot so that when the lead came in, they would get an auto email, and then if they responded, then I would follow up, and that was it. And then they got added to the database, which that's the big thing. I'm adding, active investors to the database every day. So I would never call those leads. Well, when she signed on, I had, a couple thousand leads, I guess. I gave them to her, and she just like started at the bottom with the oldest lead. And she just called each and every one of them. And within her first 3 weeks here, she got a term sheet signed on a property on Indian Rocks Beach, $300,000 loan. It was worth, I want to say, $900,000, or maybe it was worth $750,000. So it was a really low LTV loan, 12% interest and 6 points on a 24-month term. And that was her first loan with us, which was like fantastic, And most of her loans have been like, and so I give her range, to negotiate, and she earns a commission percentage based, and so I give her range to negotiate terms, and our base is generally going to be 12 and 3, which we'll give to experienced fix and flip investors, but that's probably maybe 50% of what we do, and so with everybody else, I mean, I don't know what her average loan closed is, but most of her stuff is like 4 to 6 points, which is pretty cool.
Yeah. Okay. So she has the ability to price it up if she can get it, to negotiate for the fee she can get.
Yeah. And that's what I was worried about with her when we brought her on. That's what I was most worried about in this role, is because that's what I do. Like, I'm negotiating with people every day, and investors particularly are the most shrewd and tough negotiators, right? And so they know the buttons to push, and they know when to like let on the gas or slam on the gas, and they don't often hit the brakes. And so if somebody's not from that world, it can you can quickly be outmatched. And her background was as an account manager when she worked for a hard money lender in California. So all she really did was like go into brokerages and sign up brokers who were going to refer deals. And she just made like $1,000 or $1,500 per deal. And she did, maybe 100 and something loans a year. So it was a good job. But it wasn't as much hands-on. It was just, hey, do you like me? Send your deals over. So, but I met her through actually one of the meetings we had. You had mentioned, hey, you could send out your job ad to your email list,
your own list.
I thought of doing that, and I did that, and it happened. So Lisa was actually a borrower of ours, so she understood real estate. She understood fix and flip. She'd done a loan with us. She exited it successfully, and so I was just really, I've been really surprised about how well she kind of took to the negotiation. So yeah, she went through all of those leads, and she just kind of converted people that it was found money to me, because I was never going to make those calls. And she's converted a few people off of that list. Another thing that she's been really great at is she goes into real estate brokerages, not mortgage brokerages. She does a little bit of both, but she's had a lot of success going into real estate brokerages. She goes in and asks to speak to a realtor or get information on the realtors they have there. They generally will have like a wall with everybody's business card on it. And she just goes and takes all the business cards and then calls every realtor. And that's actually how she got that So there's a condo in St. Pete that the owner has their primary in St. Pete, and they're buying a condo to flip. And it's a brand new construction condo in downtown St. Pete, it's growing here. And she already has like $400,000 or $500,000 down as a deposit. Her primary is worth over $1 million, and she needs $1.5 million to buy this condo, which will probably be worth 2.7, 2.6 when it's done. And then she's just going to list it on MLS and sell it. And so She got that from a realtor that she, got off the wall by having a conversation with somebody.
I mean, that's huge. A couple comments on that because that's a huge win. I mean, realtors are challenging just because they live so much in primary residence world,
Yep.
not nearly as much in investor world. But I remember doing that exact same thing when I was in my 20s and I worked for SunTrust Bank, doing mortgage loans, and that was one of the initial. And this is kind of like before web marketing really got going, and like my boss and like the people like a generation before me were like, yeah, get used to driving around to realtor offices and bring freaking bagels and try to have conversations and put your little flyers in their mailboxes, and that is just a really hard thing to do, especially for a personality like mine. Like I don't want to do that.
Yeah.
And it would, and granted, that was like primary residence world, regular mortgage stuff. It would produce, and sometimes they tell you to get lost, and sometimes they tell you, you're the fifth loan officer been here today, like we're good. But no, that's huge that she's converting like that from realtor offices.
Well, and the thing is nobody else is doing that for private money, right?
Not for
Most
private
people who lend private money, like decided to lend private money similar to the reasons why we did, because it was a high leverage time activity,
Right.
but that is not a high leverage time activity. You wouldn't think. But when you go into these brokerages that have a lot of brokers, there's constantly deals falling apart. And like our job is to sort of make deals, right? Deals don't necessarily come to us. There's a whole list of questions that we go through when a client calls us about, trying to see if we can get the deal done for them. Because a lot of times they come in, with an idea, and the way that the deal closes is nothing like what they expected in the beginning. But because they had additional collateral, or because they had some other opportunity, we're able to get the deal done. And so when you go into brokerages like that, they generally don't have other hard money lenders. They don't know of other private lenders. And what we do differently is we're not just a fix and flip lender. Like we'll lend on a lot of stuff that, we do a lot of bridge lending too. A lot of hard money lenders are, really focused on, fix and flip. And we do a lot of lending, where we're not doing any, rehab. It's just a situation where somebody owns a business. We'll lend on primary residences too. It might be a situation where yeah. So my understanding of how that works is that as long as the money is being used for business purpose, you can do the loan. So if someone owns their primary residence and they have a business and they need to borrow, $500,000 to go invest in their, buy widgets for their widget company, you can do that loan. On the other hand, if they owned a widget factory and they took out a loan against the widget factory, a commercial loan against the widget factory to go buy a jet ski that they weren't going to sell or rent, then that would be a consumer purchase, and you wouldn't be covered by the same protections.
It doesn't happen very often, but we actually do have the same kind of construct in Maryland. So we lend in 6 states, which makes our life a little hectic and confusing. But specifically in Maryland, you can lend to a business entity and put a deed of trust or mortgage on their primary. Yeah, it's something that's a good point. It's something that has come up here and there, but also like you got to be real careful with the use of proceeds. We all do, because they might say one thing, do another, change their story later on. And of course, if you document your file right, like if they document their business or investment use of proceeds, that holds up. Like they can't switch their story later if they,
We have a commercial purpose affidavit that they have to sign and get notarized in our file. And one thing that we started doing that I got, an idea from you guys was that we'll also have them handwrite, their use of funds in situations like that. Like if we're borrowing against a primary, like we want to know exactly what you're going to do with the money, exactly what your plan is, and then in your own handwriting and sign it. That goes with the loan file in addition to the commercial, the business purpose affidavit.
Yeah, no, that's huge. Like if you do get into some kind of sticky default situation, like that's going to come in handy.
Right.
Absolutely. Let's transition a little bit. Let's talk a bit about capital, because I know a lot of the audience is always curious about where companies like ours, like yours, come up with the funds to lend. Besides, obviously, our own money, but oftentimes we'll grow beyond what somebody has liquid. So how have you handled capital since the beginning and up until now?
Well, yeah, like in the beginning, like I said, it was just my capital. So I would do 1 or 2 loans and then be tapped out. And then that's when like I mentioned, that at that point I went to my old hard money lenders who were happy to not have to do any originations. I was actually just having a conversation with one of them the other day, and he was just saying that I think he's going through a default in another loan and having to chase people around for money. And he was just saying that sometimes it's not worth the additional points that he makes versus just being able to place it with me and then go on vacation.
Exactly.
Yeah.
No, exactly.
Well, I think that's the goal for me at some point, but
yeah.
But I've got to have enough in there for it to make sense. So,
I mean, same. Like at the right number, 10% is a great return. You don't need the 12.99 in points. You ever hear the story about when we had a capital investor make more than we made in a year?
I think about that all the time. Yeah. Yeah.
Yeah, that was kind of early on, in case people watching or listening haven't heard this one, but it was a few years into HMB. We were on the come up. We were growing quickly at the time, and we started doing pretty well. And at the end of 1 year, we were doing 1099 INTs, so it was January, to send out to our investors. And we noticed that one of our bigger investors made about 20 grand or something like that more than Jason and I did. And we were like, wait a minute, he made more than we did. He didn't have to do anything. And his few $1,000,000 had more earning power than our entire year of work. And we were like, shit. And that's when we opened our own lender accounts and started, stuffing money in there. It was small at first and then grew over time. But man, yeah, like you see it. I saw it today when I was approving the weekly ACH. The amount, I mean, and it's great. Like our investors have been fantastic partners for us over the years and will continue to be. But you can't help but notice how much is being paid out to investor capital. And if you were able to fund your whole portfolio, how much would be coming directly into your pocket? Like you can't help but think that. And that's what, to be honest, I think that's what some of the industry is missing. Like the whole institutional world, basically they came into hard money lending and turned it into a conventional mortgage almost, right? Where they're just underwriting and selling to someone else's guidelines, not making enough spread per transaction, and just trying to make it into a huge volume game. They're missing the whole point that this model was created to lend your own money. Yeah. Hopefully some people listening are, convinced by this conversation that there could be a more profitable way to do it. And it doesn't have to be as big and as crazy and as bank-like. Right. All right. So we've been hanging out doing business for 2 years or so now, right? And I've seen the growth. I've seen it happening, hiring people, growing the portfolio. Where do you see your business in the next 2 or 3 years?
That's one thing that I'm bad at when it comes to planning goals, and I have a tendency to just kind of put one foot in front of the other and just know that I'm gonna end up okay, I guess. But I'm not a good goal setter and vision guy. But I mean, in the next 2 to 3 years, it's really tough. It's really tough for me to say. It's tough for me to say where I'll be in 2 or 3 years. But in terms of dollar amount, I don't know. But what I can tell you is that what I'm doing right now is, I'm hiring I'm hiring sort of an office admin / executive assistant. From there, we'll add another 1 or 2 more originators to the team. And then the next hire will just be like a full-time servicer. Right now I'm doing servicing, and then I have a sort of a fractional controller that helps with the bookkeeping and accounting. And the goal would be bring that more in-house, have someone running all of the functions of servicing. And then, having 3 originators. I think with that group, I think we get to 50, 60 million very manageably. And I think that, my role will be underwriting, making sure that we're getting into good deals and raising capital and, managing our capital relationships and sort of overseeing. And then at some point I'd like to bring in an operations guy, someone that can just help me, keep the operation running smoothly. I'm not the best I can come up with processes and procedures. I sort of get bogged down when it comes to putting them on paper and then making sure everybody's following.
Same.
I tend to be a little bit more like visionary, I guess, in the business, and
Yeah.
so I sort of need that integrator. And so I'm looking for that too. But yeah, I think in the next 3 years, I have at least 3 originators, a servicer, and I have the office admin. And I think with that group, we can get pretty far.
No, I bet. It seems like the right number of people, and also limiting the keystrokes that you're doing.
Mm-hmm.
Like right now, in terms of originations, when you bring more people on there, also in mortgage automator and the servicing stuff, like really scaling back on, because you're right. Like at the end of the day, the 2 top level jobs, one is underwriting, in essence, like, giving loans to the right people, the right amount of leverage on a given asset, top level job, risk management, and then handling the capital, because they typically want to work with the decision maker, with the owner. 2 top level jobs, and then also default management too.
Yeah, absolutely.
Because defaults are tricky, and they require somebody who really knows real estate and lending and enough of the legal side to make smart business decisions. And there you go. And there's the top level positions in the company. No, I mean, I'm sure you're going to get there. It'll be, you hit a home run with that first originator. It's not going to be as easy to find rock stars like that as we've seen too. But they're out there.
Yeah. Well, and I use this. I don't know what is like the Myers-Briggs and like the DISC profile. What is that called? Is that just a personality test or personality
test?
Yeah. So I use the culture index, and that's been pretty helpful with kind of just finding the right personality for the right role. Lisa, but what sort of just like makes me sometimes want to slam my head against the wall is that Lisa wasn't actually an exact fit for what we looked for in the role. Like I think what we wanted in the role was like what they call like a trailblazer, which happens to be, that's my personality type. But you wanted somebody that was sort of like very entrepreneurial and was like sales motivated. There's a couple different personality types that match the role, but you wanted somebody who's very hungry, who gets up out of bed in the morning and they have to go hunt, and it's just innate to them, right? And Lisa's pattern was an administrative pattern. And so with the culture index, there's lots of patterns, like 16 different patterns in different categories, and it's a lot. And so you have a consultant that kind of helps walk you through everything and helping you figure out who the best match is. But what he said to me about Lisa was that she, her pattern, he said, I've never known anyone not to get value out of an administrator pattern. And so I gave it a shot, especially because we also pay commission only. There's no salary. And so I figured why not just hire as many people as I can and just see who rises to the top. And then but the problem with that is that I don't have much time to teach everybody. So I hired her. I hired one other person who's supposed to start after the new year, and I'll see how it goes from there. But anyway, she wasn't necessarily the best fit for the role, but it'd be hard for me to believe that someone's going to do a much better job than her, to tell you the truth. So,
well, I mean, she's certainly doing things right now that would not fall under the admin personality type. Like she's hunting.
Right. She's hunting. That's exactly what she's doing. Yeah. Yeah. What he explained to me though, is that the personality type that I was looking for is somebody who will be more calculated in the activities that they do to produce. And her personality type, she's more of a shotgun approach versus like what I described for the role, because you have to take a test and they ask you a bunch of questions, and then that's how you determine who would be good for the role based on how you think this person should be in the role. And he said basically I was looking for someone who had sort of a rifle approach and was going to be really careful about how they spent their time to make sure that they were going to get the highest leverage on it versus her personality type. She's fine with going into brokerages and, looking at getting a bunch of, business cards and then calling all the realtors. I mean, how many no's does she have to get through? Like you said, how many hangups and did she have to go through before she finds somebody who, she can work with? And so I think that's maybe the other side of this that I didn't even expect, like maybe you don't just want somebody who's just going to go out there and try to do, one specific thing to get maximum results, because, going in and spending the time on all the things that don't work actually might pan out.
Yeah, I mean, it is in general, like personalities and everything else. It's a challenging role to find.
Yeah.
It's a challenging hire we have found, and we've had some really good luck, and then also some stuff that didn't work out because, it's a combination of like, what are they looking to make?
Mm-hmm.
And are they going to be qualified and sharp enough and aggressive enough to make it happen in this niche? Because it is a grind, even with incoming leads. Like, it's a grind with follow-up, with relationships, with everything else. And, I think that should be a good goal for us too. Now that you're saying more of this, and we've discussed it recently, and like I was talking about in Philly too. I mean, if you look at it in the business of lending, the companies with the most originators are the ones who are winning. And look, we're not looking to be a 50-person company or anywhere close to that.
Yeah.
We're a team of 10, and we don't want a whole lot more people, more overhead. But tacking on a couple originators would have a direct effect on our bottom line. We've seen it this year here locally. No, I'm glad you're saying that. That's helpful stuff.
I mean, and so much of being a bridge lender, especially a bridge lender like at the local level, it's relationships. And that was one big piece that I was missing, because like I said, I don't love to be in front of people. Like at the beginning of this call, I completely lost my train of thought, right? Like I'm not a social person. I get like social anxiety almost, right? So
no, same. I get it.
So like everything I did for marketing is like behind the scenes. It's like emails, PPC, inbound, like people call me when they need a loan, and it's very easy for me to give it if it makes sense, right? And what I was missing connecting with people. I was missing being at brokerages, going to events, going to meetups, going to networking events, and what I realized is like there's even more business that way, right? Because people, especially in this business, when people need to close and they need to close in a week, or they need to close in 7 days, like they don't really care if you're 1 or 2 points more than somebody else. They want to know that when the closing date comes, that you're going to perform. And a lot of the deals that get sent to us are in similar situations. And so the more people you have, the more relationships that you fostered and that you nurture, the more opportunities you'll see. And when your email goes, like my emails go out, I don't necessarily know. I haven't had real conversations with everybody on my list either, and so everybody on her list, she's had a conversation with. They like know who she is, and I would imagine that she's going to get a higher open rate. She's going to get a higher response rate, and she's going to have just more engagement, because it's not just a stranger sending them an email. And you can do that. You could give someone 2 counties, maybe 2 counties that have between 1 million to 2 million people, combined. And I feel like that person could be busy every single day answering phones and going to meetings and being involved in the community that way. So I think that's scalable, and you could bring on more people to do that. Like you mentioned it before, you can go deep or you can go wide. And I think one great way to go deep is by being boots on the ground and knowing who the brokers are, who the agents are. Like mortgage brokers are a great source of deal flow too, especially with what we do, because by the time they get to us, they've exhausted all other options. They're only calling us because they have no other option. And when they have no other option and they need somebody who can operate quickly, then that's a 12% and 6-point loan, right? And so we love getting those, and they're happy. Their clients happy because they got a deal done that they were probably going to lose their escrow deposit on. The broker is happy because they earned a fee, maybe not as much as they wanted to, but they've got something that they were on a deal that they were going to lose. And we're happy because we've made what we wanted to make on the loan, and we can sort of allocate, because our capital is finite, and so we want to allocate it to the deals that make the most sense for everybody.
No, it's a really good point, bringing that up again about going deep versus wide, because online in your email inbox, like there's just so much noise, like from lenders, from everybody, right? There's just stuff everywhere, social media, like, and people are getting away from the offline stuff, the meetings, the meetup groups, just making an effort, even sending direct mail, like even sending, like we got some postcard campaigns and then also some handwritten note campaigns. that we're going to go in on, because it's just ways that we can touch people that they're not used to, that they're not getting these days, right? Like, when was the last time somebody sent you a handwritten note?
Yeah.
I mean, I haven't gotten one this year. I've gotten them before, but I can't remember the last time. So just coming up with creative ways to, like zag instead of zig with the rest of the industry, and that's really, really solid that you put into place. And I'm gonna take away some of that stuff from this call as well. Wrapping up here, anything else that we should cover? I definitely want give the audience your contact info, the best place that they can get a hold of you in case anyone is in Florida looking to borrow, or frankly anywhere in the country and is considering investing in private loans too, because you're taking on additional capital.
Yeah, we're growing. We're taking on additional capital, just like you mentioned on your with Seesaw, your episode with Bryce. I'm sort of on the Seesaw, so
we all are.
Yeah. We're taking on new capital. The best way to reach or would reach me would be just by email, daniel@sepcapital.com. But I'm also on Instagram at D_Paloscio. And then on Facebook, just Daniel Paloscio. Awesome.
Well, thanks again for being here. I appreciate you taking the time. And yeah, I'm definitely looking forward to seeing the growth next year and hanging out at the next meeting in May, right?
Yeah, I'll be there. I had a lot of fun. Thanks for having me on.
Awesome. Thanks again.
All right, Chris.
All right, guys. See you next time on the.
We hope you enjoyed this episode of the Private Lenders Podcast. Please note that the opinions stated by all the speakers on this show are only opinions and not intended for legal, financial, or accounting advice. Please make sure to always check with your own legal, accounting, and financial professionals. If you enjoyed this episode of the Private Lenders Podcast, we'd appreciate it if you would spread the word. Make sure to check out hardmoneymastermind.com, the #1 free community for new and experienced private and hard money lenders.